Hey everyone, it's Julie here with TipRanks. Today we're taking a look at two unanimous strong buy stocks. So let's get into it. Alright guys, welcome back. Thank you all so much for being here and TGI Friday. Today we're taking a look at two stocks that have all buy ratings from Wall Street analysts. And on top of that, they also score an outperform with TipRanks AI Analyst, which compiles a vast amount of data and comes out with an overall score. So today we're going to take a look at these two companies, what it is that they do, and of course what those analysts are predicting for the stock's future. I found today's stocks using TipRanks Stock Screener. Found under the screener menu, I put in a couple different filters, including a strong buy analyst consensus and a buy rating on the AI side. Then I went over to the AI analyst here and saw which ones came in ahead. You can check out the TipRanks Stock Screener for yourself right on the website or on the mobile app, which you can download using links in the description below. If you enjoyed today's video, make sure you hit that thumbs up button. Now let's jump right into these strong buy stocks. First up, we're looking at nVent Electric. They trade under the ticker NVT, currently priced at $107 per share. The stock has climbed 40% in the past year and is up about 17% in the last 3 months. nVent is a global leader in electrical connection and protection services. The company designs, manufactures, markets, installs, and services high-performance products and solutions that connect and protect mission-critical equipment, buildings, and essential processes. Their offerings help to build a more sustainable and electrified world with a focus on safer systems for applications like data centers, electronics, and infrastructure. nVent came out with both an earnings and revenue beat for their latest quarter at the end of October, plus raised their future outlook. For the first time, their quarterly sales exceeded $1 billion, and adjusted earnings per share of 91 cents surpassed analysts' expectations. The company's full-year sales and adjusted earnings per share guidance were raised with expected sales growth of 27 to 28%, and they saw organic orders increase by approximately 65%, driven by large orders for AI data center build-out. As I mentioned at the start, the stock does score an outperform on TipRanks AI Analyst. While rising inflation and tariff costs could compress margins, strong revenue growth driven by organic expansion and strategic focus on high-demand sectors like data centers ensures long-term market leadership and financial stability. Just 2 days ago, we heard from a 5-star analyst at Goldman Sachs who reiterated their buy rating, saying that the company is strategically positioned to benefit from major trends such as electrification and power load growth. Moreover, their planned capacity expansion is set to increase significantly, with their Blaine facility expected to be fully operational in the fourth quarter of 2026. The nVent stock has 9 current analyst ratings, all giving it a buy. And the average price target of $130 implies an upside potential of 22%. Looking at those ratings down below, on the low end we have an upside of 6% and a couple price targets with an upside of 30%. For our second unanimous strong buy stock, we're looking at Tenet Healthcare. They trade under the ticker THC, currently priced at $212 per share. Their stock has climbed 52% in the past year and is up 10% in the last 3 months. Tenet is one of the largest for-profit hospital and healthcare services company in the United States. Tenet owns and operates acute care and specialty hospitals, outpatient centers, and surgical hospitals across the U.S. The company focuses on providing high-acuity healthcare services in markets where it has a strong regional presence. They also came out with an earnings and revenue beat for their third quarter near the end of October, and also increased their 2025 adjusted EBITDA guidance to $4.57 billion. Earnings per share of $3.70 beat expectations by 36 cents per share, and revenue climbed to $5.3 billion, beating by $40 million. Their hospital segment adjusted EBITDA grew 25%, and they deployed $1.1 billion to repurchase 7.2 million shares in the first half of the year. And of course, they also have a buy or outperform rating on TipRanks AI Analyst. While some uncertainties in healthcare policy could pose risks, their significant debt reduction improves their financial stability and flexibility, and their strong revenue growth indicates robust expansion in market demand. Following that quarterly report, a 5-star analyst from Raymond James increased their price target by $50, reiterating their buy rating. They said that despite a minor dip in stock price attributed to profit taking, the overall financial health of Tenet remains strong, with increasing ASC volumes and a return to positive growth in hospital-based surgery. The company's valuation appears attractive, trading at a multiple lower than its peers, which suggests potential for stock appreciation. Tenet Healthcare comes in as a unanimous strong buy with 17 current analyst ratings. The average price target is $237, implying an upside potential of 12%. Looking at those price targets down below, we can see quite a few analysts increasing their price targets following that earnings report. On the low end, we have an upside of 8.7% and a high-end upside of nearly 23%. So that is a quick look at two unanimous strong buy stocks with buy ratings from TipRanks AI analysts. Let me know your thoughts on these companies and whether they were on your radar or not before. I always love hearing from you guys. Keep in mind these videos are never a suggestion to buy or sell any specific stock, so make sure you're always doing your own research and due diligence. Thank you guys so much for watching. I hope you have a wonderful weekend, and I'll see you back here next time.